Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Louis. We're going to take a look here at this long-term chart in gold that we've been watching here, especially I've been watching. I suggested that we got to 26.56 that you buy a 25.50 put, excuse me, a 26.50 put, and that you would have to risk probably most of the premium, which at that time was about $4,200. But you had 72 days to work with it. And of course, when the market exploded and went another $30 higher than what I expected, that put, instead of losing $3,000 that you had done had been in the future, you only lost about about $700 in the put. And now the put has still has a small loss in it, but it still has 68 days to go, 69 days to go. And I still think that's what I'm looking at. But I would not suggest that. I don't want to do those anymore because I got too much pressure from people on that. But this is right up near that. A lot of things happening here, basically what I'm looking at. Now, here's what I was watching. This is what the things that we do here on the program for Friday. This is the chart of you'll notice here in gold last night. You see how gold made this beautiful ABCD pattern right here. There's your 382 pullback making new highs. You see this time frame right here, 2301. Right there, we're making a divergence in the silver, okay? And silver is now trading at 131, so it's, this has been working pretty good. This one hasn't worked well. It's working a little bit, but this one is what's really interesting, and this is the kind of thing that we're going to be doing here on Friday, is looking at divergence. This is just a 3-minute chart, but you can see the pattern lines up really nicely. All right, now we had one other trade that we really suggested here that was getting ready to be really good, and that was right up here in the British pound. We said at 134.10, okay, in the British pound. So what we're going to do now, just for kicks and giggles, we're going to get the old chart up of the British pound, and let's see if we did okay on this. So hold on just 1 second. Oh, you can see it's moving down a little bit anyway. There was the sell here. That was the number right here. 34.10 was the number, which was right there. There was the intraday sell. We had the big move here, and now we're breaking down really bad, folks. This has got a big profit in it. So if you've got some here, make sure that you hang in there and put your stop down in here, lock in for $300-400 minimum, and that could continue to work a little bit more. Remember, as you look at this here on the daily chart, it hit the exact 1.27. Okay, now remember on the long-term weekly chart that we were looking at on this, it was also setting exactly, look at this, folks. There was our sell right there. 134.10 was the exact 786 of the all-time high way back here in 2021. Hello, operator. Well, maybe these things do work once in a while. I don't know. But anyway, this could be a good one. I don't know. At least it started in the right direction. That's the main thing. Okay, now we also talked about the U.S. dollar, that it wasn't as bad as people thought. Now, all I got to do is find it on this thing, and there it is right here. We'll get it up here. You see the U.S. dollar, everybody said it was the death of the dollar. Well, look at that number there, 99.88, okay? All right, it made it once, and it made it the second time lower by 1 tick, and now has rallied almost a full point. That's why the euro's getting hammered, and that's why the pound is coming off. So this could be a really substantial bottom, and the reason why we said that, look at that. There's your ABCD right here. Look where the support is right there. I mean, this was really big time stuff, folks. So this could be a pretty interesting situation we have going here. And you know what? it might only last 20 minutes if the Chinese government comes out with something else, or there's another, flagrant foul on the hockey team or something. I don't know. Whatever it'll be really quite active. Now let's get back to the stock market, because we had a couple of big things happen in the stock market here this morning. Here is the NASDAQ. Now remember, we made higher highs, okay, over the last several days here, just recently. That number came in at 22,204, and the high was 22,71. It went 71 points above it, which is a considerable amount, $1,400. Since that's happened, if you take a look at it on a smaller time frame, if you had a big move like this, you can see we're just pulling back to 61% retracement of the low of the day that happened here way back early this morning at 3 o'clock New York time. You see, we just made a pullback right here. So this is still acting relatively bullish, but we've got to get above this to make it really bullish. But there is one that we've been talking about for quite some time that doesn't have quite that much bullish enthusiasm, and that is the Russell. I'll just get this up here. Folks, I haven't looked at it all day. Oh, that's the reason. Okay, there's where we are right here. There's the Russell over the last several days. You can see it's been going down. What we'll do is, let's just go for kicks and giggles. We'll do a that's Byron's favorite talk. Anyway, this is what we've done here. There was a high that we made here on Friday. Okay, then we had a move, and then they had another ABC. Let's see if that was the 382, just for kicks and giggles this morning on Tuesday. There was your high, I believe, here. No, it's above the 382, I believe. Oh, 0.44. It's pretty much spot on. And there was another 382 right there. That was on Friday also. This is not looking very good, folks. As you look at this on the daily chart, everybody that bought it, there's the big ABCD up here, for heaven's sakes. I mean, my goodness. I have to refresh this because, hold on one second. Now we've taken out the lows. We're coming down now. 1, 2, 3, with the 5th day down. Now what we have to do, and you can see here, my next train of thought was, we have a big move up, don't we? Just like we did here. So what we want to do is we want to watch for the 382. You see on this one, the 382 stopped right here for a day or two, and then boom. So let's see what the 382 is going to be on this. So what we'll do is we'll go to a 4-hour chart, which will get all that data for us. I've already got it drawn in. There's the ABCD that we were looking at. There it is right there. ABCD. It misses it by, just a hair's breadth. See, it was supposed to be at 10, and it came in at 6, so it missed it by 4 points, or $200. Now we're coming down. So let's take a look and see where the 382 is on this move. So we'll get that out of the way. And hopefully there'll be a video tonight to help describe what's going on, because there's been a lot of things happening, and I've not been able to get anything from Google. I've paid everything that they asked for, but they don't really matter very much. But this is going to be really strong support in here, folks. Remember, we got this gap from back here. So if we start going below here, then whoa, there's going to be trouble in River City. So let's watch that. We'll blow this up here today and just go back to the hourly to see if there's anything that popped up really nice. Let's just check it out here. This is yesterday's action. Let's see if we had anything action today. Today is the 25th. Let me refresh this so I can get all the data.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've been asked to take a look at some of these foreign markets. This is the emerging market ETF. This is something that's been on this program for a very long time because I never look at it. We had a price objective of 45.50, and the high today was 45.64. That's been in there for so long I can't even remember because I haven't even seen it. Whether that means anything or not, I don't know, but the stimulus evidently was pretty earth-shaking. Remember, this is a weekly chart. All right, now let's take a look at, we've done the FXI, but I also wanted to do, hold on here, I wanted to do the Hong Kong market because that's another one that was hit really good with good news. What you got to remember, folks, is this was really big time news. Now you notice here, this is the Hong Kong on the daily. You can see the 61% retracement where we had the big sell-off. We had the big run-up, and you can see here in the last today or so, let's just put the hourly up. You see there's been a pretty big reversal if it's correct. And you know why it's not going to be correct is because it's, because it is delayed data on this, so there's not going to be any problem. I don't trade this thing, I just look at it, but you can see here, this was the high earlier in the morning, and then it's down 400 or 500 points. So, but if you look at this, let's just look at it on the weekly so we get a rough idea where we stand. And there it is right here, where you can see we matched that other low right here. Let's see what that is from the high that we made back here in 2023. Okay, where does that come in? Well, 618 was right here. We missed it by just a heartbeat. You can see it's come off quite a bit. And there is an ABCD pattern in here. So maybe this was a one-day wonder. That's what we don't know, but we will find out. That's for absolute certainty. Okay. All right, now let's move on here to a couple other things that we need to look at, and that is crude oil. I haven't looked at crude oil all day today, and as you can see, we've been coming down pretty good. And let's just look at it on a hourly chart because we had a pretty good run up, and we're supposed to be watching for the 382 pullback on this thing. So let's clean her up and see where we are as far as how close we are. From there's our low, right back here on the 10th. And then our high coming in right here, and we're setting at the 382 right now. Well, it's been a little bit lower. It's been down, but there it is right there, 69.58. That's the 382. And if we go down to a smaller time frame, I'm sure we can find a little ABCD that's standing in the wind. And by golly, it looks like it's in the wind right now. So let's just take a look at this. We'll draw this in and see where we are. There's your A leg right here. All right, there's your B leg, C leg, and there it is right there. It came in 69.31, so that should hold it. But again, if it fails, then that's not very good. Now this rally back, let's just double check this for kicks and giggles. From this high, I keep saying that because I'm hanging out with Byron for a while. There's the 382 right here at 70.84. And that would have been a nice one because that's down well over $1,000 today. Here's another example. We've already shown this before, but look at that incredible 382 that we had. No, that didn't make it. It missed it. I thought that it did. My bad. No good. Okay, let's look at this on the daily because we've had a heck of a run here. But all this run did, okay, all during this whole thing, let's refresh it here. All it did was make a 382 off of that high that we made. Remember, this is a 2-week rally, and all it did was come right up and knocked on the door of the 382 right here, and now it's starting to come down, but this is pretty good support. So this is still a downtrend, boys and girls. There's no question about that. You can see there's a really strong downtrend line here. So that tells us we got to get above here before we get some traction. There's so much different news out there that could happen. It's just truly amazing. I said that volatility was going to be the nature of the game for the next couple of years. I said that in 82 or excuse me, 22 or 23, and it's going to be another 2 years before. And I mean, when you see markets like copper moves 5% in one day, I mean, I hadn't seen that since Hector was a pup. That dog's 19 years old. But anyway, those are the ones that you've got to watch. I mean, they're huge swings. And boy, folks, if you're not using stops in these markets, whew, man, you was asking for trouble because that's not good. That's not a good thing. Okay. Anyway, that's what we're taking a quick gander at right here. There's a few others here that I wanted to cover. Let's get this up here so that I can make sure I don't forget it. Oh, I meant to cover the euro. Just 1 second here. We preferred to do the British pound because it was so perfectly lined up with what we were looking for. But here is the euro. You can see it's getting hammered pretty good also. We'll do the hourly chart. That's where we first started to sense that the ABCD pattern was there. That one, remember, we made a lower low. So what we had here, boy, this is really a hard one, boys and girls, for ABCD folks. Whew, you talk about a hard trade to do. Oh my goodness, what a hard trade to do. What's this one, Johnny? Oh, that's an A. What's that one? B. What's that one? That's CD. Boy, nice when they work, huh? This is good for quite a bit of money right now, folks. So if you'd done that one, your risk would have been about $300, but you did okay if you did the British pound, and that's the one that we were paying so very much attention to. Okay, now let's keep looking here. Make sure I haven't missed anything because there was so much stuff going on. The Treasury bonds, where are you, Treasury bonds? Let's get that back up here because they should be getting ready for a little bit of a bounce. They're getting hammered pretty good. And we expected a little bounce coming in here. Where is it? There it is right here. Hold on a second. And see if they're bouncing. Oh, they're not bouncing much. They did a little bit here. Yeah, well, they did bounce a little bit here on Wednesday. Yeah, 05. Boy, they gave it back in a hurry. Let's just look at this on the hourly to see if there was another 382 standing in the way. Oh, there it is right here. Oh, that's the 20th. We've already seen that one. Okay, we got a new low coming in here. There's what we got to do. We've got a new low. Slurred speech, folks. There's your high of the previous day, okay? So you take that and you draw it. Just a minute. Sorry, folks. My mouse just decided to take a vacation. All right, here's where we are. There's the high right here. And you come down and you make the first low is right there. Then you make a lower low. So you have to recalculate. And there's your high and there's your low. And where does it come in today? 25. You can see it's been going down pretty much the whole day. So remember, they don't work all the time, but they work part of the time. And when they do work, those are the ones that you want to have your wagon hitched to that star is that one. Well, that's a Freudian slip for astrology, but we're not going to do that. We're going to have Jeff Huge here on today, who's always got some wonderful things, bullish or bearish. But boy, there's so much volatility out there. I hope he can shed some light into what some of these people are doing, because it's truly amazing to see the number of people that are bullish. I happen to be watching Bloomberg and CNBC earlier this morning, and the number preponderance of bullish people was just staggering to me. But I don't quite see that. But the market's always in charge, and we'll find out whether it's going to, fulfill the average or not. Okay, let's take a break now, and we're going to have Jeff Huge on at the break, and we'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks. We have Jeff Hughes of Alpha Insights, and I hope he has some insights for me because I'm one confused cowboy. Let me tell you. How are you, Jeff?
I am great, Larry. Thanks for having me on the show today.
Thank you. It's our pleasure. You're going to talk to us about the inversely relationship between the treasuries and stocks?
I'd love to. You know, it's interesting. If we go back 12 months ago, back everybody was bullish, and I took note of what you just said, that, you know, everybody's bullish today. A year ago, everybody was bearish. In fact, there were only, if we looked at the AAII Bulls Bears spread, it had gotten down to like negative 25. I think only 25% bulls at that point. And today we're at about 51% bulls, and that's the highest we've been in the last year. And if you take a look at this spread, back at that time we had about nearly 5% on the 10-year Treasury. That's in red, where the S&P was down at around 41.25. Today we're 1,600 handles higher at 57.30 or 57.25, I think last I looked, with the 10-year yield bouncing off of its recent low of 364. Now, that inverse positioning, right, where everybody's long stocks and everybody's long bonds versus before everybody was bearish. They had sold off the bonds to 5%. They'd sold off the stocks down to 41.25. You know, and the situation was a nice setup for, you know, nobody's long. Right now, everybody's long everything. And I think we're already seeing a reversal in the bonds. We're seeing what's known on the street as a bear steepener, where the 10-year goes higher as the 3-month and 2-year yield goes lower. And so that steepening of the yield curve is something that I think is going to be very bearish for equities.
Okay, let's take a look at the risk of a possible recession. Boy, this is a neat looking chart. What are you seeing here, Jeff?
Well, Larry, what we've seen going back over the last 30 years or so is we've seen two big Fed rate cutting cycles.
I'm
right?
sorry for laughing, but I keep telling people about that, and nobody believes me. This chart explains what happens when they drop interest rates.
Yeah, I mean, the red line at the bottom is when the Fed's cutting rates, and what happens to equities? They collapse in tandem with Fed funds rates. And the reason for that is because the Fed is notoriously looking at lagging data. They're looking at unemployment and inflation, and that is very lagging data. It's not telling you what's actually happening. From our lens right now, there's a high probability that the U.S. economy entered recession sometime in the late second quarter, possibly the early third quarter. We're thinking maybe July. And if that's a fact, we'll find out in the next 3 to 6 months as, you know, the Fed aggressively increases their cutting and the economy doesn't respond. In fact, we expect equities to move much lower. And what's typically been the case is when you have a high PE like we have today at about 36.6 times on the Shiller-Cape ratio, you tend to get a pretty significant decline. Back during the dot-com bust, the PE peaked around 44 times, so we're just below that. We think there's a long way to go to the downside for equities here.
Wow, that beautiful chart. Would it be too much trouble for you to send me that chart just by itself?
Happy to.
I'd like to put this into the videos and newsletter that I sent out. This really describes what I've been trying to tell people, and it's a beautiful chart, so I'd love to have that if you could. Here's the S&P 500 composite cycle.
Yeah, so what we've done is, we're showing you what Ned Davis Research publishes every year at the beginning of the year. And they say, look, if we look at the 1-year seasonal cycle, the 4-year presidential cycle, and the 10-year decennial cycle, and we aggregate all that together, based on history going back to 1928, what will the market do in the forward 12 months? Well, the blue line describes what the market would do based on those seasonal and cyclical factors. The problem is we're right in the heart of what I would describe as a declination, right? And what's happening here is we've got Montgomery cycles from August 15th through November 4th that are going to have a heavy influence on the turning points. We had a lunar eclipse on the 17th of September. We had the FOMC rate decision on the 18th. We had a Gann 180-degree cycle turn on the 19th. We had the autumnal equinox on the 22nd, which means the 20th and the 23rd were in play. And what we see in the cycle composite is that it was slated to peak on the 23rd. And then we have the presidential election coming up on November 5th. And the declination moves to a low at the 31st of October. But initially, we should see a decline into that October 2nd low, which is a major Montgomery cycle turn date. The point I'm trying to make here is that we're going to have a very volatile period between now and the election. And I think the next big leg will be to the downside into the October 2nd low. And then I think we'll get a rally. And then I think we'll see another significant decline, a steep decline into the end of October, possibly early November, right into that November 5th election date, because the Montgomery cycles usually work with a range of 2 trading days on either side, and there's a weekend coming up, so it actually pushes to like midnight on the 4th of October. And so I think that's, or 4th of November rather. So I think that's going to be a really important period of time.
Well, the whole world's looking at it, that's for sure. Here's the NASDAQ 100. Boy, it hit another big thing today. Just took out those highs by a little bit and gave 100 points back in a hurry, but doesn't look bullish to me. This was the run. This is the one that led the whole thing up.
Right, and people forget that it topped more than nearly 2 months ago, over 2 months ago, October 10th or July 10th, and now we're looking at the 25th of September today. So that's, 2.5 months ago. And we've made a 78.6% retracement. In fact, today we just poked our head through it and came right back down. And, it wouldn't surprise me to see that short-term trend line taken out. But I think once we take out the 19,600 level on the NASDAQ 100, it's curtains. I think we're going all the way back down to the 200-day moving average, or probably through it. And if we go with authority through that 200-day moving average, then I think that's marked probably intermediate wave 2 of a new bear market, and that puts us very early in the process.
Yeah, that's for sure. Looks really interesting. Let's get the next one up here. I think we've got a break coming up here, Jeff. And we got 47 seconds. Let's get the next one up here, and we'll get it started with the Russell, because this one really looks like it's got big trouble. So please continue.
We've been talking about the weakness in the Russell relative to the larger indexes for some time. It actually peaked back in November of 2021, and we've retraced a little over 61.8% or 78.6%. But what I see happening here is a crash setup. We've seen a big down and then a 3-wave recovery. We have not made a new high yet. And if that big down was minor wave 1 and this was minor wave 2 up, then we're in the early stages of minor wave 3 down of wave C, which could carry this Russell 2000 down considerably. We think 35 to 40% downside.
Okay, stay tuned for Jeff Hughes with more, folks. We'll be back in 3 minutes. 877.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Jeff Hughes, and he's showing us this beautiful ending diagonal triangle with an A, B, C, D, and boy, this looks like it's ready to go down.
You know, Larry, we like to use the Elliott wave principle as kind of a long-term model to get a sense of where we are in the cycle, right? And if we start back in 2009, we think that that low marked the end of cycle wave 4. And this entire advance has been cycle wave 5, and we've counted it out at multiple degrees of trend. And the thing that's really thrown a lot of people for a loop, including ourselves, is this last move up, which we've described as an ending diagonal triangle. The problem is you can't see it in the S&P 500 from a cap weight perspective, only from an equally weighted perspective, because those top 7 stocks, the Magnificent 7, have become 30 to 40% of the market's market cap at various points in time, and it's really distorted the index from its more natural perspective. But when we look at it from an equal weight perspective, you can see the beauty of this. It's very clear. Oh, yeah. You know, 1, 2, 3, 4, 5 up, and this 5th wave is an ending diagonal triangle. That rising wedge is the terminal position, and the throwover that we're seeing right now that slightly exceeds the upper boundary. Once we close back below that upper boundary, it's curtains for the market. We think we're topping right here at cycle degree, and by extension, super cycle degree. Potentially, we think super cycle wave 3. And there's also a long-term multi-year negative divergence in momentum there when we use the 89-month simple moving average, which has really kind of marked the lows of this advance all the way up. And that negative divergence says that the market is running out of steam, basically, from a momentum perspective.
Yeah, it certainly looks like that from both those charts. Anyway, now we're going to take a look. I don't quite understand this sector rotation. If you'll explain that to me, please.
Oh, okay.
Of course, I don't do stocks. That shouldn't surprise anyone. So.
Yeah, sector rotation is basically looking at the 9 different or 11 different sectors of the S&P 500. And, you know, there's defensive sectors like real estate, utilities, staples, and healthcare. And those are actually leading the market, which is a very bearish signal. It's not it's a very late cycle sort of move when money starts to flow into REITs and utilities and staples and healthcare stocks. Now, financials are in there as well, and that's benefiting from this steepening of the yield curve. But look what's not in the leading category: technology, energy, communications. They're lagging in a big way, and energy is basically pricing in a recession. Technology is completely reverse course from where it was, 2.5 months ago. And communications are faltering as well. What also is faltering is discretionary. We've seen a bit of an improvement, but it's starting to fall by the wayside. What's also interesting is industrials and materials are starting to make a bit of a comeback. They continue to be supported by all the infrastructure spending that's going on. You've got about $1.5 trillion in infrastructure spending between the CHIPS Act, the Inflation Act, and the infrastructure bill itself, supporting those levels. And one of the commodities that seems to be getting a lot of attention is silver right now.
Yeah. Well, it sure is.
What we think is going on, and this has happened in the past a couple of times, but the commitment of traders data shows that the commercials are net short, and we think that that's usually a bad situation when you get a massive net short position by commitment of traders data. What it's suggesting at this point, as the price of silver makes something like a 9-year high, or is about to make a 9-year high, there's a huge short position that could be forced, could be squeezed out of the market. And there was a point in time back in 2021 where you had the guys on Wall Street Bets trying to squeeze these commercials at that time. And it worked out pretty well for a while, but then it reversed. Right now, I think the situation's different because it isn't retail trying to squeeze them. It's demand. There's institutional demand for silver, and institutional demand for copper, and institutional demand for a variety of infrastructure-oriented metals for power infrastructure. Silver is one of the components that goes into power infrastructure, and that's something that's getting a lot of attention right now. And I think that silver is setting up for a big, big move. And we're actually going to spend a lot of time in our next monthly newsletter talking about what's going on in commodities and how the breakdown in the dollar is going to create a major tailwind for commodities like gold and silver.
Well, tell us more about the newsletter and how they can get it, Jeff, because they should get a sample of it because it's one of the best I've ever seen, and I've seen quite a few of them over 62 years. And hats off to you, pal, because it is really good. And it's easy to read and understand, too.
Thank you, Larry. So you can find us on Substack at hugeinsights.substack.com. Huge Insights, the big picture, is the name of the newsletter. We publish it on the first Saturday of every month, so the next publication is due out October 5th. The most recent publication came out on the first Saturday of September. It's entitled On the Road to Serfdom. We got a lot of positive feedback on that. I'd highly recommend your listeners, give it a read. We give a pretty broad, like a 5 or 6 page free sample of the newsletter, so you can get most of it for free. And if you really like what we have to say and you want to dig deeper into our positioning and recommendations, you can pay as little as $15 a month and get full access to all of our ideas and portfolio recommendations and positioning.
Okay, tell us, I've posted here for those of you that are driving in their car and stuff, your website, your Twitter, and Substack. If you give us those headlines, please. Yeah.
Sure. The website is www.jwhinvestment.com. You can find me on Twitter at alpha_insights. And again, the Substack address is hugeinsights.substack.com.
Well, this is great, buddy. Please keep your pedal to the metal because, boy, you've done a great job for us so far. We really love seeing this information. So thank you very much. And make sure you send that chart to me. I could really use it. I think that's very, very descriptive of what's going on.
Will do, Larry. Thanks again. Have a great day.
You bet, my friend. All right, we've got another minute or so to go. Let's get back and see how much everything is going up and down. So let's see. The euro has not done very much or not. We've had... not really much going on, actually. Let's see if the S&P's done anything. Well, NASDAQ is still moving a little bit lower. And silver had a little bit of a rally here. Let's just see what it's done here the last few minutes. We had a little bit of a bounce. Let's just do the way we usually do it and go from your high down to your low, and you'll see that rally was right up to the 382. It's not, well, it's 30 cents. That's a lot in silver. But, remember we had that, though. This is what's so beautiful about what we're going to do on Friday, folks. This is let me get this up here. It's going to be an exciting day with this kind of volatility. Oh my God. That's why I don't sleep at night anymore. Oh, Larry, stop it. I get the wrong one here. Get this out. There's where we are right here. We went right to the 382. Where does it measure to? Right there. There's your A, B, C, D coming in. Right there on the bottom. In fact, there are two ABCDs here that verify that that was a pretty good temporary bottom because, it's intraday. I don't like that. Okay.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Treasury note chart, and the one thing we've been very bearish on this because of the formation on the weekly is about as bearish as anything you could possibly get. If you remember, this is what we're doing right now. If you go back to that 4-hour chart, it's telling us it's a really strong potential to have more bearishness because there's your retracement, and you can see it took a whole day and a half to do their selling up in here. Now you can see we're breaking down. That's not a very bullish formation, folks. So, of course, if it reverses here, then yes, it might. But as long as it stays below that, looks like it could be heading lower. And that would give us a really nice ABCD pattern on the really long-term pattern here. As we draw it up here to let the folks see it, we'll be doing this kind of thing on Friday all day. Hopefully make a couple of bucks. If I can't make any money on a Friday like we're supposed to have, I'll be really surprised because, boy, these are great swings intraday. And, of course, you know, ABCD start intraday and then go on out to this weekly, daily, monthly. So should be some fun day on Friday. Anyway, that's what we're paying attention to here as we look at this thing, unfold here this afternoon. And one other thing I wanted to mention, and that is that be sure you do something nice for some of your relatives or neighbors or strangers. Just do something nice and spread the wealth a little bit. We're very lucky here at TFNN that we're able to do what we love to do, make a couple of bucks and try to share it with some people that are far worse off than what you are. And tonight, you will get some videos tonight, boys and girls. I'll probably only send 2 because I don't want it to start the overloading process. I overdid it over the weekend. I had all kinds of great things lined up, but some of them worked pretty good, some of them didn't. But that's the way it is. Some days it's chicken salads, some days it's something else. So you got to be really careful in here. So live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow, and our guest will be Stan Harley. So we'll see you then, folks. May God bless.